Everyone, and welcome to the week ahead. I'm Tony Nash. Today, we're joined by Blake Morrow, Tracy Shuchart, and Albert Marko. Everyone's joining us again. Blake joined us, I think, 6 months ago, so I'm really excited to catch up with him. We're going to talk with Blake about the dollar breakdown and the transition in Mexico and the impacts on the Mexican peso. With Tracy, we're going to talk about the U.S. oil production and what's happening there, as well as potential energy shortages by 2030. And then with Albert, we're going to talk about the U.S. election and the September Fed cut. I have a feeling it may come in the first section as well, but we're gonna get there in detail with Albert. We've got a couple of viewer questions to start out. We have both of them are actually related to Albert, and they want to know about the U.S. election, particularly swing states. So we'll cover those in the last segment on Pennsylvania, Michigan, and then the breakdown in the swing states. Thanks, the Cactus and Eddie Tennyson, for bringing those questions in. So Blake, hey, thanks for joining us. I really appreciate it from beautiful Scottsdale, Arizona.
Well, thanks for having me back. You know, it's not beautiful yet. I got a few more weeks, and then you can try that again.
So what have you got there? 105?
It's still 100. It's about 105, but it's it's monsoon season, so it's a little muggy. It's bleh, But other than that, all's good. It's always sunny here in Scottsdale.
I was born in Phoenix, so it's in my blood. I get it. So, Blake, thanks for coming on, and you are, what you bring to us about currencies is fantastically important. You posted this video, a video on Twitter earlier this week on the trajectory of the U.S. dollar. We've seen several currencies, the yen, the euro, gaining against the dollar since July, early August. So can you tell us what's happening there at the moment?
Sure. Well, first of all, you go back to even on I have a week ahead video as well, ironically, but even on the week ahead video that I talked about earlier this week or over the weekend was about the dollar breakdown. And really the Fed Chairman Powell just opened up the door for, further. Everybody knows it's a Powell put. Stocks are rallying, dollars slumping. Now, people look at the dollar index and they get a little confused because they see maybe it's bouncing, it's not selling off, and that's because we're seeing a lot of the euro pull back, especially following this big move that we've seen overall. But if you look at the dollar against other currencies, whether it's sterling, the pound dollar is breaking out to the upside. The Aussie dollar is at it's above 68 cents. The Kiwi is above 62 cents. The dollar Canadian broke a really critical level of support, and it's just been trading heavy over the last week. The dollar index may be stalling, which I expected. I expected it got a little oversold. The euros bounced, the euros pulled back a little bit, but the dollar is really selling off against a lot of different currencies, and it's. I still feel it's going to be broad based, but there are a few standouts. Like I said, a lot of these commodity currencies are breaching multi-year trendline resistance levels as people start to reprice the idea that the Fed is joining the rate cut campaign, and they could be fairly aggressive depending on future data. And so that's what makes next week's not just non-farm payroll, but the ADP, ISMs, the JOLTS, all the employment data that we're getting. The weekly unemployment claims today came in. They weren't alarming, which is good. That's probably the most real time.
In line, right? Pretty much.
Yeah, they came in line. It starts getting above 250, 260,000. We start worrying. But that's showing, some stability. But the unemployment rate, above 4%. And if that continues to tick higher, it's going to start really concerning Fed officials and anybody who's bullish to the dollar. So we have seen the dollar move, and it's been I want to say it's been broad-based over the last few weeks, but it's stalling right now. But you have to look underneath the hood a little bit and not just look at the dollar index. You got to look at, where it's weakening against. And Europe has had its fair share of weak data, even as early as a few hours ago in European trade. So.
Yeah, it's a particularly weak economy. I'm curious with the Fed discussion. Are those expectations of a September cut kind of already set in those currency expectations now? Or let's say it's a 25 cut, or, is that set in with everything now, or will the announcement make for major changes in currency expectations?
Well, that I think right now it's everybody in the FX land is very comfortable with 25, 25, 25. The pace of cuts will be really known as I know the whole market's been talking about it, but really it's all about the labor market. That's been the big shift from the Fed. The Fed's gone from inflation to labor. PCE, is it going to be super important at the end of the month or tomorrow? Excuse me. I think it's more end of month flows that are going to be more prevalent in the market versus the read on inflation. It is really going to be the shift to jobs, and that's why next week is really going to either heighten expectations for a 50 basis point cut. And I don't think the Fed wants to do that. I don't think the Fed wants to seem political, because they will look political. And I know Albert's not here yet, but he'll probably have something to say about that as well. They will indeed be viewed political if they have to cut by 50 basis points. I don't think they're going to, but if you really want to see the dollar move, watch those rate expectations, because if they really ramp up for a 50 basis point cut going into next month, you're going to see the dollar get walloped from current levels.
So the Fed's changed from inflation to jobs. That's fine and that's great. But what I've said many times to people is, you kind of have to be careful what you wish for with Fed rate cuts, because the Fed doesn't really cut in good times. The Fed cuts when they see risk on the horizon, right? Or, I mean, they're not just saying, oh, we've beat inflation, so we're going to kind of normalize rates. They're cutting, in my view, they cut when they see risk on the horizon. Is that a fair?
It is. Well, nominal rates are significantly lower than where real rates are at right now. And so that's the thing is they should be cutting rates right now. They theoretically should be. The pace of a cut, yes. I mean, if they cut 50 basis points, I think you have to sell equities on that. Like, you have to sell risk. There's the Fed's obviously seeing a slowdown way, a lot quicker, that they have to act in that. And I know there's been that argument with, anybody who trades equities. Well, I'm just going to sell, I'm going to sell the stock market as soon as we hit all-time highs or as soon as the Fed cuts rates. I don't necessarily agree with that. I think it's more of the pace.
Yep.
Yeah, right. So if we start seeing labor data that looks like they should, then that's probably going to be a concern for anybody who's long equities as well.
Right. So, okay. So we just had this big labor revision last week. They cut 810,000 jobs or something out of the last year. When you look at labor data now, how much of a factor is that for you? I assume the algos are taking the labor data at face value, so you kind of have to play to that, right?
I would think so, but at the same time, we even heard the Fed chairman. I can't remember if it wasn't the last meeting or the meeting before last. They've all acknowledged the fact that the labor data might be overstated. And so, am I looking at the labor data and saying, every time we get a jobs report, oh, it's really, shave 50,000 off of that number. The real number is this. I'm going to trade it as a headline number and based off expectations. I mean, as traders, that's what we do. We're like, okay, well, the market's looking for 120,000 jobs, but the whisper number is 100,000 jobs. Great. So, we come in below 100,000 and people are going to probably spank the dollar, or, the
Right.
equity markets will rally or sell off substantially based on expectations for that particular number. I don't go in there. Don't go in there thinking, oh, try to overthink things. For me, I just look at price action and say, well, here's what was expected. Here's what we got. And how's the market reacting to that? Should I expand? Should I leverage up and take a bigger position because it should be acting a certain way? I take that one day at a time, usually as a trader.
Yeah, I almost
Markets
view
never
these.
care about revisions anyway.
Right.
Yeah, no, exactly, Tracy. You're 100% right.
I almost view these data as indexes, like rather than actual data. What's the incremental change? And, it's about the levels rather than the kind of nominal figure, if that makes sense. Because
Absolutely.
what do these numbers really mean? I don't think anybody really knows because they're made in, in some room in DC with people who are probably partisan based on whoever's in office. And they're juiced one way or another based upon what they want. And I know that sounds really terrible, but you kind of have to view them as an index rather than an actual top level number. That's
sure. And it's if it's something is really outside of expectations, that's when, we take action. I think the overall trend is pretty clear, though. I think the labor market is softening, and I don't think it would surprise anybody for any of us out there if we saw us actually not creating or losing jobs as we go into the end of this year. I don't think it would surprise anybody, but that would also continue to weigh on the dollar. Since we're talking about the dollar in this case, it'd probably continue to weigh on the dollar as people would view that as the U.S. economy is slowing. It's now giving us actual evidence of labor market slowing. So the Fed may have to act a little bit more aggressively.
Okay. But that would weigh on the dollar even more if the Fed.
Absolutely. Yeah. Well, and then you have to also take a look at the rest of the market. I mean, when I'm looking at other, we're dealing with fiat currency. How's the dollar faring against the UK economy, and how's the UK economy doing comparative to the US, and our expectations in line up, in the Eurozone. Like when we got the CPI data out of Spain, Germany today, we're going to get France tomorrow. Their inflation data is softening. It's building a case for further rate cuts from the ECB, which, the market wasn't so sure before this week. But, obviously it's reflected in the euro, and then it makes the dollar look a little bit stronger when it's more of a euro story than a dollar story.
Sure. And can we talk a little bit about BOJ? We've seen the yen strengthen a bit, of course, and I always feel like we have a contest of messaging between the BOJ head and the finance ministry. And I could be wrong there, but I get the sense that BOJ head, you edit, is a little bit kind of ambiguous in his statements, and finance ministry has to come in and clarify things and give better direction to things. Is that the case? And do you feel like we're kind of at a destination with JPY, or where do you feel like it's going to go?
Well, that's, first of all, it's a great question. And Ueda had last week, he had the ability or the opportunity to really kind of walk back some of his hawkishness, and he didn't. And he really defended the BOJ's actions, which solidifies the idea that the yen, as long as data continues to show that Japanese economy inflation expectations are rising and the economy continues to stay strong, they're going to continue to normalize policy when everybody else is cutting. So that, in my opinion, means that the dollar yen should be sold, and probably most yen pairs for that matter should be sold on any rally. And as a result of that, I look at the yen, it's been a trader's playground and paradise. I'll tell you what's happened over the last couple of months made a lot of traders quarters, and probably years for that matter. And I think we're going to see the second half of 2024 give us the same type of moves in the yen. As long as we continue to see divergent policy between the BOJ and all other central banks, I think the risk is that we're going to see continued yen strength.
Okay. And so where do you think that heads? Is it like a 125? Is it that strong, or?
That's a little aggressive, I would think. But you have to take into context what's happening with everything else. I mean, right now equities are sitting, we're a hop, skip, and a jump from all-time highs. I believe that there is going to be a currency, and it might not be the dollar, that emerges as a safe haven currency. We've already seen it in the Swiss franc. The Swiss franc has been able to really strengthen in times of fear of what would happen in the Middle East, what's happening in Ukraine, Russia, that whole situation. And we see the Euro Swiss now down at levels that are near 2023 lows. Then you and near multi-year highs. Then you have the yen, which I think will also take a little bit of that. But when you're talking about like the US, like who wants to buy the dollar? And this is where we're probably going to have to defer a little bit to Albert in a bit. Who's going to want to buy the dollar, knowing what two candidates that we have as that are probably going to be both fiscally somewhat irresponsible. Some of them, either one,
Some more so than others.
Yeah, correct. So,
Right.
so if the market actually starts to reverse and we start to see stocks sell off because of seasonal reasons, because of political reasons, whatever the reason may be, the yen and the Swiss franc might be where the FX market turns to for a safe haven trade versus the
Sure.
dollar. I don't know if the dollar is going to hold that title this time around.
So Albert, Brainerd as Treasury Secretary means full on MMT, right?
Yeah.
I mean, that's a given. Brainerd, and the only issue I take with the Swiss franc being a safe haven over the dollars, it's just not big enough. I mean, it's just not. Last time there was talk of such a thing happening, the Swiss franc appreciated like 30%, and the Swiss central bank was just like, "No, we're not doing this," and acted against it.
I'll take a 30% appreciation in a currency, though. I mean, it's not a bad short-term gain, right?
That's
Yeah.
a ridiculous amount.
Yeah, but it has negative effects for the Swiss economy. It's just not it's not really I just don't like the whole Swiss idea. I'd be more in line with the Canadian dollar and gold going forward. Of a safe haven more so than the Swiss. The Swiss is just not big enough, and they're very conservative. They don't really allow their currency to appreciate that much. The Canadians, on the other hand, they don't know what the hell they're doing, and they're just tied to gold and oil. So as those commodities rise, the Canadian dollar goes up. I would definitely go into that as a safe haven versus the dollar, but it's only temporary. I mean, obviously the dollar is the reserve currency, and it's not going to lose its status for the next God knows how long.
Yeah, those are some very, very valid points, Albert. And here's the thing I want to say about the dollar, and a lot of people, especially people that have not really watched price action over the course of the last 20 years, people are like me, I'm in the markets every single day, like watching tick by tick what happens literally since the late 90s. And I, even when I started trading currencies, I wasn't even around when the dollar wasn't a safe haven currency. And if you go back to like the .com bubble, and I have to always take people back to like 2000, 2002, you watch the stock market sell off, the dollar did not positively respond. There's a lot of other reasons why we could get into long conversations about why it didn't at that point. But the fact of the matter is, correlations will change. And I'm not opposed to the idea that the Aussie and the Kiwi or the Canadian could be safe haven currencies, especially in an inflationary environment when you're seeing like the commodities indexes, which I'm sure Tracy, you're very familiar with. They look like they're bottoming out and they might be heading higher soon. So, could those commodity currencies really pick up some of the mantle? But I do want to say this. It's all about the pace of what happens in the markets. If we have a gradual sell-off, like, and I'm using the sell-off as just our benchmark right now. If we see the stock market, drop 5% and then 10% and then 15% over time. So let's just say over the course of a year or, 2 years, the dollar won't respond to that. When there's a liquidity crisis and there's an event-driven sell-off, the dollar could really respond. And that's when the dollar really, everybody turns around and goes, oh crap, I just need dollars. I'm going to sell everything. Just give me dollars. But if it's measured and it's not like some event that drives us into some sort of crash, yeah, I'm not sold on the dollar being the safe haven in a situation like that.
Yeah, but the thing is dollar down in that scenario is reflationary, right? not really with the Swiss. The Swiss is good for deflationary crises. But I mean, we can get into the arguments of, Swiss dollar, Canadian dollar, whatever. But, honestly, it really depends on who's going to be Treasury, who's going to be Fed chair in the next 4 years. I mean,
Yeah.
Gensler with Harris, and then that Besant guy with Trump. Both of them are, looking to stabilize the bond market after Yellen's really just butchered it. So, like I said, it depends on what the election brings and who the cabinet positions are and whatnot.
I could almost tell you with certainty that the night of the election, whenever there is a winner, so to speak, even though we may not know for, I'm sure you could talk about this, that it could be months or weeks away from finding an actual who actually won, but there will be a lever that's pulled that night where, this is the winner, Harris, Trump, whoever it is, this is the winner, lever gets pulled, the markets go whoop or whoop in one direction. What they do a couple of days after that probably has more to do with after the dust settles a little. But yeah, you're exactly right. We'll know exactly who the Treasury secretaries will be. And we know exactly who the president will be, at least in our minds that night. And there will be lots of volatility for sure. So
I remember in 2016 when Trump was announced, markets initially didn't take it well. And then the next day they just took off.
I don't think they believed it. They didn't believe it.
Yeah.
Right.
Yeah. Interesting. So just one last thing on the end, and then I want to move to the commodity currencies because you mentioned that a couple of times, but I may have mentioned this before. In 2012, about this time of year, I was standing in line at the Grand Hyatt in Tokyo. The yen was at 76. There was nobody in the hotel lobby waiting for breakfast. I was the only person. Abe comes into office, or they're teeing up for Abe come into office. Abenomics comes around. The yen goes to like 90 or something. People then were saying, we just need a yen at 95. Within a month, it was just snapped back. That hotel lobby was full. People were waiting for breakfast. So that currency, those fluctuations matter a lot, right? So if we do see an MMT style US Treasury, could we see a yen back below 100?
I believe we could. Absolutely. I mean, the yen, I mean, remember, this is a weird situation that we're in. We have one central bank that is possibly going to be raising and normalizing rates where everybody else is going to be cutting by anywhere between 50 to 200 basis points, whatever, depending on the central bank you're dealing with. I mean, that lopsided teeter-totter going in the other direction. Yeah, I mean, but you have to imagine a strong yen like that would absolutely decimate tourism. And just like you would be, once again, the only person in Tokyo at the Grand Hyatt at that point.
I liked those days. It was great. I had the whole place to myself.
You're the only one at the breakfast bar.
Right, exactly. It was great. Great. Okay, let's talk about commodity currencies. I have this chart for Canadian dollar, and you talked a little bit about commodity currencies. What's exactly happening there? Of course, we've seen oil and commodities prices rise a bit. Is that really what's driving those commodity currencies?
I don't think so. I think the Canadian dollar has been driven all by positioning, and that's been that there. I don't know if, I mean, you guys read all the macro stuff too, probably the same stuff that I read. Everybody believes that Canada's economy is going into the, it's going to be in the doghouse, and rates are going higher. We're going to refinance, and everybody's going to be stuck at higher rates. Blah blah blah. It's going to kill the Canadian economy. If you looked at CFTC positioning, and you looked at the history that the CFTC has been keeping positioning, speculative shorts in the Canadian currency were at a record beyond ridiculous levels. And that means that the whole fast money hedge fund community was expecting a move to 140 and beyond. And that has unwound. And I expect that tomorrow's CFTC data, which is reported on Tuesday, you're going to see that dramatically change, because when the dollar the dollar CAD sliced through 136, it killed all the fast money traders, all of them. So I think it was a big positioning trade. Now we're probably getting close to neutral, and I think that you might see a correlation reemerge with whether you're talking about the Canadian or the Norwegian krona. you start to see spikes in crude oil back above 80, 85 bucks. I think it's gonna be a tailwind for Canadian longs and also Norway longs too. I think that that crude oil correlation will come back into play now that positioning is now that the market really screwed, you know, most of the trading community or investing community.
Does
So,
that help Aussie dollar as well?
well, I think the Aussie just looks good. It's literally one of the only central banks that's not looking to cut. So despite its inflation data that just came out, I mean, people are like, yeah, they might, maybe they won't. And you never know if Australian employment data continues to be rock solid like it has been, people might actually talk about the RBA being the only other central bank next to the Bank of Japan who's raising rates. So
Yeah, that's a whole topic, Australia. We need to spend some time talking about that at some point.
What happens if what happens if gold goes to 3,500?
I would assume that these commodity currencies continue to rock, which I don't see that as being impossible. You know, so I think that the Aussie, the Kiwi, the Canadian, the peso, the rand, anything that's an emerging market currency is great. And my colleague that I work with at Forex Analytics, he always says, you know, it's also, you know, furthest away from my bed, you know, as far as, you know, all of these troubles and Ukraine and Russia and Middle East. It's like, oh, look at Australia. They have nothing to do with anything. Let's put our money there, right?
Yeah, it's great. It's a great kind of grandma type of wisdom.
Yeah.
So, okay, can we talk about Mexico for a minute? So we've seen
Sure.
political developments there with Claudia Sheinbaum coming in and outgoing president AMLO. Sheinbaum was elected on June 2nd. There have been a lot of appeals and cases kind of delaying the final election results. She was just accepted as a president-elect on, I think, August 15th, and should be sworn in on the 1st. So AMLO is doing some things going on the way out to kind of make it a more nationalistic, kind of one-party state. And we've seen the Mexican peso weaken by about 18% over the last 3 months since the election. So what's happening there, and how much is her election playing into currency dynamics?
It's big time. Let's imagine one of our whatever president we have, Bernie Sanders, just that would be a banana republic. Anyway, that would be something. But let's imagine him just firing all Supreme Court justices, all of them, and then, you know, allowing them to you know, the popular ones to be elected by popular vote instead. And that's what's happening, and that's shaking up the investment community. Anybody who's long Mexican pesos right now is terrified of what is happening with the judicial system. And, you know, you got a lot of big banks, you know, whether it's Goldman Sachs, I believe Citi, they've all exited out of Mexico. You got JP Morgan, though, just today saying, no, we stand behind this, but they might be in front of a freight train. Technically speaking, if the dollar Mexican peso gets above 2020, that's 2020.20. I mean, that's a 38% retracement. Theoretically, we could be trading back up at 22. Now, we can't ignore the fact that the Banxico has exceptionally high rates that is very attractive to carry traders, but we can't ignore the fact that a lot of them have been taken out to the graveyard already, but several have entered back in with this yen stability and equity market continued rally. So I still believe that the dollar Mexican peso, I'm a buyer on dips, meaning I'm looking to sell Mexican pesos on any rally. I am looking for a move above 20. I am going to look for a move towards 22, and especially if Trump gets reelected, because just imagine this young Mexican sitting president, Sheinbaum, just sitting there meeting up with President Trump, and imagine what he is going to do. And he is going to try to really bully Mexico, Canada as well, and probably get his way to a certain extent, which will really put the peso under pressure. So those things, as they evolve and as the market looks ahead and says, oh, wow, look at Trump in the polls and look at this becomes more of a reality, that's just going to put further pressure on the peso. Now, I think the election is going to have a big impact on the Mexican peso, but I believe they're already doing their own damage right now. before she takes office on October 1st, I believe is the day.
So I think Mexico is a weird one to me because in fairness to the people in Mexico, crime is terrible. There are a lot of major issues and they want change. Unfortunately, AMLO's been in charge for a long time, so he's making change on the way out. Like it looks really weird. So I feel bad for your average Mexican citizen who's having to live with this stuff.
Yeah.
Right? And they're seeing these institutions change. Maybe they voted this stuff in, maybe they didn't, but they just want something to change because their life has become so hard, right? And that has an impact on their currency, which makes things even more expensive for them. By the way, we're having a huge thunderstorm here right now. So if you hear noises in the background, that's probably what it is.
Yeah, I agree with you. It's making it really difficult, but the flip side of that is it's also making Mexico so much more attractive from a business standpoint, especially, U.S. corporations that are looking to move out of China and have been for the last 5 years. I actually know people that have actually moved their plants from China to Mexico. 300 plus staff, going from one place to another and rehiring just due to the labor costs in Mexico and how much more beneficial they are in China. So for that reason, I think I hear what you're saying. I think ultimately a weaker Mexican peso is going to bring a lot of opportunity for investors, traders like myself. I'd love to park myself in some Mexican pesos at cheaper levels longer term, but we have to get past the next 6 months. And you are right. I mean, the outgoing administration and what the risk they are opening up to the judicial system and how it might be corrupted by cartels. I think it's a real risk. It is a real risk.
Yeah, Albert, what do you see there? What comments do you have on Mexico?
Mexico is just the one big mess from the political situation to cartels running rampant and out of control over there. And I don't see, Mexico squandered its opportunity where the Chinese exodus in manufacturing coming to Mexico has been just, negated by the political antics of the Mexican government. It's just, it should be prosperous and the peso should be gaining significantly. But I mean, as an investor, what do you do with Mexico?
Well, they decided to go to Thailand or Vietnam instead of Mexico, right? I mean, it's, which doesn't really solve the supply chain problem.
No, it doesn't, and it's a shame. And this is all based on security and political risk. It's not going to change. It's probably going to get worse over the next 5-10 years, and there's nothing more I can really say about that.
Interesting. Okay, so we're looking for the peso to cross 20, and then things get interesting, right, Blake?
I think so, and I think that's where from a trading point of view, 20 to 22 is like just an open door. Probably more of a positioning move and an election move, and probably and if it's accompanied by any type of risk aversion. So if it's accompanied with some selling in September, October ahead of the elections, we could literally be at 21 or 22 on the US dollar Mexican peso exchange rate within the next couple of months. And by the way, I have no position, and it's just how I'm looking to play it.
Sure. Sounds super interesting. And I hope that helps some manufacturing land in Mexico. I think that would be fantastic. Okay, great. Blake, thank you very much. Tracy, Blake was talking about commodity currencies, and the US dollar is a big commodity currency. So you've told us for a while about US oil and gas production starting to roll over. And you posted this chart this week to confirm it, which is a great call, by the way. Help us understand, if you don't mind, why is this happening and how long does this cycle last? Meaning, how long will we be turning over before we kind of turn back up?
Well, I think that really all depends. A lot of the reasons why we're turning over is, there's a lot of tier 1 acreage is burned through. There's been no CapEx because oil companies, oil investors got burned twice. Right? I mean, oil, gas, or energy used to be weighted 20% of the S&P 500. it's weighted 4% because investors have just fled, because as soon as you had, as soon as shale came, it was drill baby drill. All these companies were, it was the Wild West. They incurred so much debt, so much, things just got really out of control. And so I think what we're seeing now, especially starting in 2016 was really when we started to kick up about all the mergers and acquisitions. So, companies were just eating other companies that were just not successful. And we're still seeing huge mergers and acquisitions last year and this year. And a part of that reason is because these companies are buying production. They don't want to invest, they still don't want to invest CapEx, right? And so you have that. And then if you look at, what's going on, we have rotary rig counts, which they have been going down. That really hasn't affected production so much per se, but that's been kind of negated by new technologies being able to extract more from those wells and extend their life a little bit. But we're seeing frac spreads pull back, which are frac spreads are a collection of equipment that are needed for a typical frac job. And so they look at what equipment's out there, how many people are out there. That's on the decline. Duck wells since 2020 they've chewed through all the duck wells. They're still chewing through duck wells, which are drilled but uncompleted wells. And so we're kind of getting to a point where everything is now starting to roll over. And, I don't see that changing really anytime in the near future, to be honest with you, because again, still companies are, we just had Shell just came out today and said they're cutting globally 20% of their E&P staff, right? So Shell, right, big one.
Okay.
So, we still have these companies that are trying to keep investors, keep their balance sheets clean, pay down debt. And then, part of the other reason that we were seeing a lot of production in the US, and over the last couple of years is because a lot of these smaller companies wanted to look really enticing to bigger companies so that they could get bought out. And so, they were running hot, but, as this pool gets smaller and smaller, thus does production.
Okay, so that's interesting, you note about Shell cutting their exploration and production stuff. So have they been acquiring upstream companies? Is that part of the reason why they're doing that, or are they just cutting back on production?
I mean, they've been slashing budgets everywhere, most notably in their energy transition departments.
Yeah.
But, they still, they're still trying to attract investors. So
okay. So let's say a certain person is elected president who says drill baby drill. Okay. What's a way in which they could accelerate that? Is that accelerating depreciation or something like that? So for say calendar year 25, we accelerate depreciation for E&P activity, and that's over by say 26 or something.
I mean, you can't really force these companies to drill. What you can do is make leasing more available and readily available, as we know. Like if we look at Biden's 5-year Gulf of Mexico leasing plan, was the least amount of parcels literally ever. So you can open up leasing, you can open up Alaska, you can open up, you could make, changes to federal leasing to make it cheaper. So you can kind of incentivize drilling that way, but you can't really ultimately force these companies to drill more.
Okay. So things like accelerating depreciation doesn't really help them because it's such a big planning cycle.
Exactly. It's too long of a planning cycle, in my opinion, particularly if you're talking about, any kind of deep water project that's
okay. And so do we still get the stuff where, like, if you're getting expand production, you're killing polar bears and spotted owls and stuff, like, does that stuff still get rolled out, or are people kind of beyond that?
So, well, I mean, you have to, if we're talking about Alaska, for example,
Mhm.
there is a oil reserve, which means there is land there that we have set aside for oil production. It's our reserve. So then again, but there's all sorts of lawsuits that kind of hinder projects there as well.
Okay.
So,
Can I ask a dumb question? I know this is something that it's an old issue, but the Keystone XL pipeline, which Trump was moving forward and Biden pulled, that would obviously bring a lot of crude down from Canada, which would help the Canadian dollar. Is that dead, or is that something that if, he who shall not be named is elected, could that be redone?
it could be revisited. The probabilities are probably low. He'll probably talk about it for sure, because
Okay,
everybody, that he wants to satisfy that industry and get votes. So I'm sure that he will talk about it. Now, it's, one thing to talk about, and two, can we get these companies back on board again, and do they want to be involved? And particularly, it's going to depend on, who is the Prime Minister of Canada also.
Right.
Justin Trudeau's not exactly oil friendly.
No.
So, if they elect liberals again that are anti-oil and gas, that are going to do everything they can to try to shut down oil and gas, or at least make it not grow there.
Right.
Then, that's going to be a hurdle for companies to kind of get through in their thinking of, do we want to get involved in this project again?
Okay, and the crude that comes out of Canada is what?
Is
Heavy?
heavy. It's heavy crude. So,
Okay, and that's what the Gulf Coast refineries are tooled for, right?
correct.
So that's why Keystone XL is important, so that US Gulf refineries can get the oil they need,
Right.
rather than import it from Venezuela or whatever.
Right, exactly. It's obviously trying to stay away from Venezuela.
Right.
Of course, we can get it from Iraq or somewhere in the Middle East, but again, that's, it's
Supply chain
not
risk.
cheaper to get it from
Exactly.
Canada.
Yeah, okay, that's good. You also posted a piece about energy shortages by 2030. And so there was an industry group that said, no, we're likely to have energy shortages by 2030. There's this chart from the Financial Times. Can you talk us through this? What's happening? And kind of, I thought everything would be green by 2030, wouldn't have any
Right.
worries anyway. So what's happening there? Why are we going to be out of energy by 2030?
Well, and this was the 2024 Global Gas Report that just came out and said that we're going to have this. And not only that, we also had this same week, ExxonMobil also came out and said we're going to have this huge supply gap. And again, it's because there's been lack of capex in the industry for so long. This isn't just a new phenomenon.
We've been talking about this since like 2016 or something, right? I mean, it's been a long issue.
It's been a very long time. And so, even though everybody says everything's going green, well, that's not exactly happening on pace as the IEA said that it was. And we all
Right.
know that that pace was ridiculous. But that's not happening. And, what's happening is you're still seeing emerging markets, move into oil and gas from coal, for example, right? You just have South Africa just came out and they have a huge plan to switch from coal, which is their largest energy source right now, to natural gas over the next 20 years. So
Okay.
we have, you're still going to see growth regardless of whether, Europe wants to kill itself.
Yeah. They'll be burning wood and having campfires in the front yard. So is South Africa, do they mine gas? Do they extract gas from their own offshore or something? Are there resources there?
No, but there's plenty of resources in Africa that there's
Okay.
plenty of gas available.
Okay.
It's just
Okay.
building out infrastructure.
Okay. Are you worried about us not having energy by 2030?
Oh, I think there'll be shortages in places. Am I worried about the United States in particular? No. But well, let's say, I don't know who's going to be elected and what is going to happen. So I'm not going to rule out anything. We all know anything is possible.
Right.
But, as much as the US is kind of gung-ho energy transition, we're still consuming 21 million barrels a day of oil. So
Right. Albert, are you worried about this running out of energy or at least having shortages by 2030?
Not really. The U.S. political apparatus tends to move quickly whenever voters feel a little bit of stress of, energy prices and gas shortages. So I don't really,
They'll figure something out.
yeah, they'll figure something out real quickly.
Okay. Blake, sitting in Scottsdale, Arizona, are you worried about not being able to turn your lights on in 2030?
No, I worry about water, but no,
I think that's actually something to worry about.
I live in the desert, man. I want some water, but no energy. I'm not. But that does, if what Tracy is saying. I mean, the thing is that just builds the case for commodities longer term, and if there is some sort of shortages or scarcity, that's going to benefit certain currencies in certain ways that I'm always keen to and thinking about how I position myself. So
Sure. Would you, given the production in the U.S., would you consider the U.S. the U.S. dollar commodity currency?
actually, I've heard people argue that. I've yet to see evidence of it because of our role as reserve currency. The dollar acts in a completely different manner. So no, but does that mean it can't change and will change sometime in the future? If as countries transition away from the US dollar over time, which I believe is currently in process, will the dollar be more affected by commodities and in a positive manner? Potentially. I mean, I could see those arguments popping up in the years ahead, but not right now. Not that I see currently.
Okay, great. Okay, now we're going to talk about U.S. politics. Okay,
Oh,
so Albert's going to
Okay.
lead on this, but Blake and Tracy, you guys jump in anytime, and 4-letter words are acceptable. Okay, Albert, you put out this election map earlier this week, and you say Democrats with 266, Republicans with 262. And you said Wisconsin is ground zero. So first of all, is this still your map after the RFK and Tulsi announcements?
Yeah, still the same, right? Democrats in Michigan have 600,000 voter advantage. In Pennsylvania, the news came out that all Republicans cut it down to 400,000, but that doesn't really take into account the many youth in Pennsylvania that switched parties just to try to ruin Republican primaries, right? Again, it's still about Wisconsin. I don't really see much of a change. Wisconsin had a 96% turnout last time in 2020, which Saddam Hussein would have loved, right?
Kim Jong-un would love it.
Oh, I mean, those are just stellar turnout percentages.
Yeah.
And can Trump win Nevada? I mean, he could, but a lot of union bosses there in the gaming industry.
No tax on tips, right? I mean,
Yeah,
wouldn't that help him in Nevada? No?
Right. Arizona, it's an immigration issue. I think Trump takes that. I think he takes Georgia, safely takes North Carolina.
Okay, sorry, hold on a minute. You said Georgia. There have been very meticulous and concerted messaging about Brian Kemp and Trump over the past week. And is that key to part of your belief that he'll take Georgia now that Kemp is on board with the Trump campaign?
I mean, to a certain degree, but I think inflation has really hit Georgia pretty hard. And we also have to remember there's a lot of COVID refugees from Michigan, Pennsylvania, and whatnot that fled to the South, Florida being one of them, Georgia, North Carolina being the other states. So, and Texas, but Texas is really no question that Trump's going to win that. But you do have the situation that if Trump can win the Omaha vote, lose Wisconsin and somehow win Nevada, you get a 269 result, which would be a media frenzy. I mean, I would like to see it just for the, the chaos that would ensue afterwards.
Yeah, and
which would go to Congress, and Congress would vote.
And the president of the Senate would cast the tiebreaker, right?
I know. I think it's House only, not in the
House
Senate.
only. Okay.
Yeah, I think it's House only, if I'm not mistaken.
Oh,
I mean,
fantastic.
these are like, dream fantasy scenarios, but it's not out of the realm of possibility. I mean, listen, this is going to be a closer race than people assume.
Oh, yeah.
It's going to be within 1 percentage point in multiple states.
Oh, yeah. I agree with you. I mean, I think anybody who says they know what's going to happen in the election is crazy. So I noticed you have New Jersey, and is that Vermont or is that New Hampshire as a blue? I'm sorry about my Northeast state.
Blue.
Light blue.
Trump's not winning New Jersey, and he's not winning New Hampshire. Just forget about it.
Okay. And what about Virginia? You have Virginia as a light blue.
Yeah, it's closer than it's been because of Youngkin, but the expansion of government jobs in Northern Virginia makes the possibility of Trump winning it a lot less likely.
Okay.
This all depends. Obviously, this is before the debate that's supposed to happen.
Right.
And Kamala Harris is not a good speaker, right? She's really not. And she could bomb the debate so badly that
could we have another Democratic candidate?
No. But she could bomb it so badly that it flips a lot of the independent votes, and then Trump would be at advantage. And they're so worried about it that they wanted Harris's campaign staff allowed to be there with notes to feed her information, because they know she can't debate. Right. So this is what's brewing. Until we have the first debate, it's really, really hard to tell exactly who's going to win. But if I had to bet today, I would say 55% Kamala, 45% Trump, just because the numbers in the Electoral College.
Okay. So do you think people are actually going to watch the debate?
Oh, God.
100%.
Oh, yeah.
Everybody wants to, everybody, well, no one, like myself included, I don't think I've ever seen her speak ever. So, you know what I mean? And of course I've read what I've read, but I've never heard her speak. So of course I'm going to be tuned in. It's just, I think most voters will, because they want to see, the train wreck.
Yeah, you didn't watch the DNC? You weren't glued to the DNC?
No.
I mean,
sorry, let's not.
Okay.
I'm just going to play drinking games. How many times she says unburdened?
Right. Or laughs.
Or laughs. I was going to say, I want to hear the cackle.
So, I mean, I think everybody's gonna be watching this debate, because it's gonna, as Albert points out, it's gonna point out a lot, and it's probably gonna shift all those colors that you see in the nice little infographic there quite a bit. Yeah.
Yep.
Interesting. Okay. Very good. Well, I can't wait until that happens. What are the biggest issues as you see, Albert?
Immigration, inflation, crime. 1, 2, 3. I mean, the Democrats will point to abortion, which they're desperate to have as a top issue. But I mean, that's only in a couple of states, really. But they're key states.
It's a very tight demographic too that is really focused on that, right? I mean,
yeah, absolutely. It's white suburban women. They're the ones keeping it up there.
And urban female college students.
Yep.
I think really focused on it. So. Okay, interesting. Now I can't wait till the debate. I think it'll be very interesting to get some feedback on that. So let's circle back and talk about the Fed a little bit. We talked about the Fed a little bit at the top of the show. In September, you believe there will be a rate cut, right?
I've said that since January of this year.
Right. 25 or 50?
I think it's going to be 25, only because you do 50 basis points, you'll surge the price of gold, which causes other issues, and probably launch inflation again going into 2025. That's just my opinion. Who the hell knows? If gold surges, they'll sell bonds to buy gold, and that causes issues. And I don't think they want the bond market in any more trouble than it currently is.
Yeah, let's talk about the bond market a little bit. So we've seen Yellen just sell the heck out of short-term bonds, right?
Of course.
To bring cash in. So what happens on the other side of the election to these short-term bonds that she's sold?
Oh, that's above my pay grade. I don't really know about that. But the fact that they're talking about Gensler coming in for Treasury Secretary tells me that they really have a big problem with the bond market, and he's probably top 5 people in the world that can deal with the bond market properly.
So you think you think Gensler could fix it?
Oh, 100%. If there is anybody to fix it, it'd be Gensler.
Really? Okay.
Yeah.
That's good. That's good to know. Okay.
Mhm.
So we do have like a weird duration issue with bonds, right? So she's funding the government through very short-term money to keep interest rates low, to keep the debt kind of ratio low on that, the interest ratio. So does he gradually stretch out the duration of that if he comes in, or how does that happen?
Well, again, that's over my pay grade. All I know that their primary goal objective for both the Treasury and the Fed is to manipulate the long bond, and how they do it is, whatever mechanisms and tool they use, it is what it is. But that's their primary objective. So whatever they do, it'll be in the long bond.
Okay. Just going back to the Fed, we've had guys like Bostic, I think it was yesterday, say that he doesn't want to reduce rates only to have to raise them again in a few months. Is that a worry that you have?
Of course, if you do 50 or 75 basis points, and all of a sudden inflation comes back, what do you think? What do you think is going to happen? Of course, they're going to have to raise rates again.
Raise again in Feb or something like
Of course, they're going to have to.
Okay. Okay. And so could you see like 325 cuts before the end of the year, something like that? Or do you think that's too soon?
I could see it. I would guess 2 cuts max, but I mean, I guess they could do 3 or 125 and 150. But again, they run the risk of triggering inflation again.
Yeah, I guess my concern is this: with the official inflation data and with the official jobs data, I'm not seeing a strong case for cuts. I'm seeing a moderate case for cuts using the official data. So are they looking at proxy data or something to come to this, or do they just kind of feel like, no, it's about time we need to do this?
Well, they have their own metrics and what they look at, right? And however manipulated it is, it is what it is, right? Again, it really depends on what happens and who's elected, who's going to be Treasury, who's going to be Fed, how many rate cuts they do. So we really can't even guess. I mean, the gold market is smelling something because it's at 2,500 an ounce. So it's
Right.
obviously they see something they don't like on inflation. So again, we got to wait until November to figure out what happens for the next 6 months.
Okay, great. And then how much does the candidate factor in? If they, do you think they'll hold in October, November because of the election? Will they just stand where they are because they don't want to be seen as interfering?
Yeah, I think so. I think they'll do a September cut to help Harris, but after that, I guess it's like a wait and see.
Okay. Okay, very good. Blake, you look like you're thinking about something. I want to make sure.
No, I was thinking about, how the Fed will be perceived. And I think they really don't want to cut by 50. They just don't want to. We'd have to see a pretty horrible jobs data all week next week. It wouldn't be just the non-farm payroll. It'd have to be the accumulation of data. Matter of fact, I should have looked before we started. I'm not sure if we're going to get the services data. We should get the services data next week as well. The ISM, because we'll get the manufacturing on Tuesday. We'll get the services data actually, yes, on Thursday. So we're going to have a really good picture of employment going into next week's non-farm payroll, and all that data has got to come in way below expectations.
Well,
And I don't think the Fed wants to pull the trigger. So.
I think the markets would freak out at 50 basis points. I mean, people may say they want 50 basis points, but I don't think the markets want 50 basis points, because that says to me, we've got some real trouble somewhere else.
That's right.
I agree.
It's careful what you wish for, right? So
yeah, and I think that NFP coming, I think they're going to have a big beat just for optics. I think they did revisions and undercut them last month specifically to beat this month.
Okay, so I just want to make sure I'm hearing you guys correctly. So 25 cut,
Mhm.
kind of status quo on the dollar, because that's kind of priced in, status quo on crude prices, status quo on gold, equities, that sort of thing. We're kind of along the same path because that's the expectation. If we go 50, that's a kind of oh crap moment where people go, wow, there's something that we're not seeing. And then, you see the dollar tank a bit, you see crude prices rise because the dollar's tanking, you see equities have a oh my gosh moment, and you see equities start to take a pause. Is that fair?
Depends which equities. I mean, I think tech would surge 50
Of course,
basis.
yeah.
Of course it would. But
Nvidia to like 500.
yeah, everything else would be not having a good day.
Yeah.
Well, and you gotta think that the Fed, they meet on September 18th. So we're talking 3 weeks away from right now.
Mhm.
Basically a little less than 3 weeks. That's an open invitation. If they cut by 50 because they had to, that's an open invitation to sell everything because you got an election just a month away, and seasonally it's a bad time to be in equities anyway. So no matter where the stock market is, I'll hit the bid no matter what. So
Yep.
me personally.
Very good. Guys, thank you so much. This has been fantastic. I really appreciate this. Thanks for your time. Have a great day. Thank you.
Thank
Thanks,
you.
Tony.
Thanks, guys.